On Wall Street, the Dow Jones Industrial Average dropped 943 points today. S&P 500 slid 3.5%, its third straight loss and its biggest drop since June. The declines come as surging coronavirus cases force more shutdown measures in Europe, raising fears of more restrictions to come in the U.S.
Tonight, we're bringing in a financial expert to talk more about this big drop today in the market. Brian Battle works with Performance Trust, a financial planning group in Chicago. Brian, good to see you. Thanks for being with us. I'd like to get your immediate reaction to the drop today. What's your take?
So this is 3 days in a row for the S&P, one of the broadest measures of the market, and it's a part of a larger story. You know, if the virus is getting worse, the virus isn't hurting the economy. It's the lockdown and the shutdown and the quarantine that slows the economy down. So if that's getting worse, that might be something that happens after that. But it's a part of a bigger thing. You know, we had a big rally in the market today specifically. The heads of Twitter, Facebook, and Alphabet, which runs Google, were on the Hill, and they got a rough ride from the senators there on the Hill. So those three tech companies were down 5% and also contributed to the sell-off today.
What are some of the key factors that worry investors moving into the next couple of weeks? Is it the virus? Is it lockdowns? Is it the election? Is it a combination of all of these things?
It's a combination. I'd say the lockdown is maybe a longer-term thing. That's the U.S. economy is going to be locked down for a certain period of time, and that'll recover. I think what we're starting to price in is the election. This is taking longer than I thought. The candidates are very different on their tax policy, and Joe Biden, candidate Biden, has said if he gets elected, he's going to raise taxes and he's going to double the capital gains rate. So if you are a stock holder this year and tax rate's going to double next year, you sell now at a way better, way more favorable tax rate. So maybe some of those feelings are starting to come in as the race tightens and we get 5 days away from the election. People are going to start trading their pocketbook, and it's going to be bumpy here for the next couple of days before the election.
Brian, it's been said that you can't time out the market, but in this volatile time, what would be your advice to people to manage their level of risk and also minimize their losses?
Yeah, so you don't want to be a trader. You want to be an investor. You know, if you're looking at your 401k, you're right. You can't time the market. It's impossible. Nobody can do it. So what you should do is follow your financial plan, be conservative if you can't take back and forth like this, and think about your investments over the next 6 months, year, and 2 years. If you think about it day to day and week to week, you're going to make yourself crazy. Spend a lot of time on the front end having a plan and being diligent about how much risk you can take, but then stay with your plan and consult with your advisor. If you're using your 401k at work, I'm sure you have access to an advisor there.
All right, pack that patience. Brian Battle, as always, great advice. Thanks for joining us tonight.
You're welcome.